Thank you, Mr. Chairman. As you all know, in 2012, the four biggest banks originated more than half of all the mortgages in the country. So I'm concerned that if we open up the secondary mortgage market to private capital, but impose no meaningful requirements to protect smaller lenders, then the primary market dominance of the four biggest banks may lead to their dominance in the secondary market. And in turn, their dominance in the secondary market may help them become even more dominant in the primary market and allow them to further crowd out the small lenders. So I'm worried about this. I know many of my colleagues are worried about this. So what I want to start with is, Mr. Stein, do you think that consolidation is a serious risk? And if there is more consolidation, what do you think will be its impact on access and affordability, particularly with lower income borrowers and rural borrowers?
Thank you, Senator Warren. I do think it's an issue. I think that that it's fine for lenders to pick their business strategies and decide where they're going to lend to, but there are smaller lenders who are making loans in rural communities and underserved communities, and it's important to promote that and provide an outlet for those loans. So I think having a diversified primary market competition is the most important thing to make sure of. So I agree with your premise.
So you mentioned in your testimony that you and your organization support more mutuals as a replacement for Fannie and Freddie, and that they would be responsible for issuing and guaranteeing more mortgages. Could you explain exactly how it is that mutuals would make sure that there was adequate market access?
Sure. So we would turn Fannie Mae and Freddie Mac into mutuals that would be owned by the lenders that sell to them, just like the Federal Home Loan Bank system is. You have to put capital in before you can get capital out. And we think that would provide a seat at the table for smaller lenders in decision-making to make sure their interests are considered. Large lenders are always going to have more influence, but this would provide smaller lenders with more influence, and we would require equal pricing. We think that that would do two things for access and affordability. First, it would align incentives so that people, since equity is at risk, the entity is less likely to go crazy as in terms of buying Alt-A mortgages, for example. They're going to be more careful, but on the other hand, lenders want to sell loans and earn origination fees. So there's going to be a tension on the credit box. We think that both sides of that would be covered. You need to get a good credit box to serve people. And secondly, we do believe it would keep rates down for consumers. We want primarily competition at the primary market level. At the secondary market level, it's going to be an economies of scale business. There's not going to be a million of these entities, most likely. And stock ownership, the mission is to create value for shareholders. And so to the extent it's possible, there's going to be some oligopolistic behavior. With a mutual, the equity isn't, members are not just trying to make money from the equity that they've invested, they're trying to provide a low-cost funding mechanism that earns them origination fees. So there's a countervailing pressure to keep prices down, and mutuals do tend to require a lower return on equity, which would translate to lower prices for borrowers.
Good. Thank you very much. I mean, I think it's critically important as we think about the housing finance structure that we focus on the access question and make certain that there's access all across the country and across different income levels for potential home borrowers. Thank you. I want to ask about another question, too, and that is that Fannie and Freddie's charters require them to promote access to mortgage credit throughout the nation, including central cities, rural areas, and underserved areas. The broad duty to serve the entire market plays a critical role in making sure mortgages are affordable and available in all parts of the country. And it creates secondary market demand for loans that otherwise might not get written, even though people receiving these loans are perfectly creditworthy. So, Ms. Cohen, if Fannie and Freddie are replaced by secondary market entities that have no such duty to serve the entire market, what kind of impact do you think that will have on mortgage access and affordability in low-income communities and rural communities?
Thank you for the question, Senator Warren. The reason these hearings are happening now is because the market is quite restricted. It's mostly only a market for people who have wealth and who have the highest credit scores, even though there are many other people who are creditworthy. And so if we set up a system that does not provide a duty to serve, we're basically going to have a market like the one we have today, where very many people who need housing cannot get the kind of housing that will build wealth. We've got many communities where wealth was gutted by the foreclosure crisis, and it's urgent that we get those people back into.
Thank you. And I know I'm out of time, but if I could just ask Mr. Diaz to comment very quickly, particularly on the impact on Hispanic borrowers, if you could.
Yeah, I think, the access to credit has always been a problem for low-income and minority communities. And without CRA, for instance, a lot of the early lending in the 90s and 2000s would have been very difficult to orchestrate because we had to prove that low-wealth, low-income borrowers can be good credit risks. If you take that away, what is going to be the incentive for them to do that extra mile? It's completely uncertain to me, and I worry we're going back versus trying to strengthen a market that worked at some point, collapsed for reasons having nothing to do with low wealth, low income borrowers, but they again are going to play the brunt of access because there's no constituency really that's going to protect their interests.
Good. Well, thank you very much. Given the importance of homeownership in wealth building, I think this is just a critical feature. Thank you, Mr. Chairman.